Don't know that I can live up to Rick's introduction there, but I do my best about trading earnings and gaps. I've been doing it full time for a while, but let's get on the presentation. The first thing I want to tell you is a disclaimer that they're for the examples provided here for educational purposes. They're not meant to be any advice or recommendation. You should examine your own circumstance to determine the suitability, and by all means, use simulated trading first before implementing any new trading strategy. And finally, trading involves the risk of loss of capital, so it should be capital that will not put you in the poorhouse if you lose it. A little bit about me. I'm an ex-U.S. Air Force fighter pilot. I've got master's degrees in both computers and in business. I've been an active trader since the late 90s, and the time where you could throw a dart at the stock list and make money. Full-time trader since 2009. I am a technical trader, but I use limited fundamentals, i.e. earnings and things like that. I don't work for hit and run candlesticks. I'm an independent here, and I do coaching for those who might be interested. You can check us out on our website and contact us for free, no obligation chat to see if everything goes. Hi, John. How you doing? Go over a couple things, and this is not going to be in-depth. It's not going to be a full earnings presentation. It's just really kind of a short overview of some of the things to look for, kind of a freebie for the people who are here, and pointing out just a few nuances. But gaps itself could be a course in and of itself of about 4 to 6 hours. And to trade them well, you really have to spend a lot of time and effort learning about them, watching the behaviors, and modifying the strategy as it goes along. But why do we trade gaps? Why do they gap? Or could be the other way around. Why do they gap and why do we trade them? And evaluating the gap for any possible direction indications, what considerations to use, and how to develop a gap training plan and some example trades. Well, why trade gaps is they're often the beginning of a major move. A lot of times they're after earnings, and up or down, and they can signal the beginning of a reversal trend, and could be what we call a J-hook or an inverted J-hook if it's gapped down after an up move. They can be highly profitable in both the very short-term trade and longer-term swing trade. I'm going to have a focus on swing trading here more than day trading, although I'll cover both. And people say, how can I swing trade gaps? Well, that's the $64,000 question that I'm going to answer today. The stocks usually gap up because of some report, news item, or press release. You've got scheduled events like earnings, conferences, market reports, yada yada. Things you know about in advance. And there are unscheduled events, some sort of new contract award, FDA announcements, stuff like that, and analyst upgrades, and, oh, by the way, earnings warnings and guidance out of cycle, maybe 2 to 3 weeks in advance of earnings. We're kind of in that warnings window for that stock. After the event, the price will fall or rise to meet the supply and demand, and come into equalization some way. And the big question is, will a gap combined with other price patterns force investors to react on emotions rather than logic? Now, that's kind of where we want to. And our dear departed friend, Goofy Golfer, used to say ad nauseum. It's not about the report. It's about how the stock reacts to the report. And that's good. I mean, you can have good earnings, i.e. NVIDIA today, but they provided so-so guidance, and it made a fairly substantial run over the last couple of months, and it was probably baked in. And when they didn't blowout earnings. They only just met earnings. And when they didn't provide blowout guidance, uh, the street said, you know what, it's time to take our profit. So we'll go over some things. I want you to understand that all up gaps are not good shorts. A lot of people have a lot of misconceptions about things like ups and downs. Anything that gaps up, you got to short it and fade it. Anything gaps down is good to go long. In fact, most of the time, it's the opposite. If it gaps up and it's reversal and say against the most recent trend, it's probably a reason to go long. If a stock gaps down and gaps down on volume and continues down, and I've seen a couple of questions on stocks today that had big, long, high volume candles to the downside, and people are asking about, should I go long? The bottom line is most of the time you want to buy high and sell higher, or sell low and sell lower, or cover lower. Okay, but most of the people trying to get a bargain. You bring the old mentality of, buying a car or a vacuum cleaner or beds or whatever it is and get the cheapest. You don't necessarily want to do that in the market. Not all gaps are filled, at least in the near term. So they are filled over time, and I used to be a bigger believer than I am at the moment. I do watch gaps, and I'll show you where the gaps are potential target areas and stuff, but I'm not necessarily thinking about how they're filled, and I have a different, maybe a slightly different view of what a gap is as far as filling than some of the others I'll show you. Those where is the top and the bottom of a gap. Always try to look for a gap in the opposite direction of the most recent price movement, because it will produce a shock value that can be exploited. We always want to note where the stock is gapping to. And I'll show you some examples of where it gapped up to support / resistance areas, and where it may have gapped down to a support level. Therefore, it wouldn't necessarily be a stock that you'd want to short right away. I'm going to focus on the longs today, because most of us are long traders. We have a lot of people who are trading in their retirement accounts. And I'm just going to focus on that. But anything that I say could be, the reverse could be true for shorting and for going to the short side. We should always consider where the overall market is doing, meaning relative strength. If the market is gapping up and gapping up in a significant way, your stock needs to be gapping even further than that market gap. So if the market is up 1%, you need it to be 2, 3, or 4% to show relative strength. If it's going to 1%, then you're just going with the market. What's its sector? Is it in favor by traders and investors? And the one that's really a big one here is, does it have a high short interest? I'll show you where I get that, where you might be able to get it, and how to employ that into a good strategy. All right, elements of a gap trading plan is the setups are pretty much, I look for the things I just covered, to scan them, how to find them. There's a gap list. Your software can scan for gaps. You can provide an earnings list. You can look at pre-market movers. However you want to do it, there's a ton of them. I go to briefing.com every weekend. I create a list from there of all of the stocks that are going to be reporting the coming week. I call out those that have very low volume, and then I publish that list, and I post it in here every day. Now, the entry, there are good and bad entries for everything. There's traps or whatever. We don't think it is nefarious that they're out to get us type of thing, but there are traps that we can fall in. I will get to that in just a little bit, John. If I don't answer your question, make sure you repeat it, please. I'll be happy to talk about that. The trade management, we'll talk. The entry and exit is, you've got to, pretty much have a plan. Am I going to enter at resistance? Am I going to make it break resistance, and by so how much? What if it's between, let's say it gaps up and it's between support and below the resistance, maybe 1% or $1 or whatever. You have to decide in advance. You have to have rules set up by which you will trade. Because when it comes to trading, especially day trading, it is very quick. You need to make your decisions. If you're talking about swing trading, it's not necessarily as much, although you want to swing trade them and get in early, you need to have those rules so you don't make any mistakes. And you need exit plans. Exit means stops and targets. And then obviously money management, risk management, you need to not bite off more than you can chew. You need to make sure you don't buy your normal standard 400 or 1,000 shares that would be your standard on a stock that is moving 2 to 3 times more than is the normal stock that you buy. And it ought to be based upon where your stop is, and that will keep you in a manageable size. But that's the trade management. I'll go over a little bit, but for the money management, risk management, I'll just barely cover it. That's really a whole other topic. The effect of a gap is a lot of psychological stuff. Can you imagine if you were a hedge fund manager and suddenly the stock gaps horrifically against you? You have to have a stop. Can you imagine what their boss is screaming at them to get out and cover if they were short? Now, you almost have to imagine if I were a hedge fund or if I was somebody who was short, where would I put my stop and what actions am I likely to take? That way you kind of analyzing the enemy or analyzing the market, however you want to call it. But anyway, I want to know how I can exploit their pain, help them out of their situation. There's a couple of different types of gaps, and I won't go into all of those because we'll just talk about what we got as our examples. So what I want to do now, without further ado, is just come on over here. And here's my earnings list. I created this. It's a list of 61 stocks for today, 2017 0210. And if I put down 02 dash, you'll see I have earnings lists all the way to the 13th. This weekend, I'll take the Monday through the following Monday, and I'll look at the earnings list and create those. So we cancel that out. I've already got it open, and I have it in alphabetical order. And some of the things that I'm looking for, obviously, I'm going to talk about the percentage of float in a minute. The average daily volume. This is the key. My average daily volume for swing gappers and stuff is about 300,000 shares. So I pick stuff that's pretty close to that. I find a nice happy medium that's in there, and I cut off anything that's lower than that. Some you got is 30 or 40,000 shares, whatever. I really don't care. Those aren't going to come up. What I'm really interested in if I'm day trading is I'd like for a stock to be trading, as close to 1 million shares as possible on that day. That means I have a very easy way to get in and out of a stock. It's like being in a theater where there's only the window for an exit and somebody yells fire. Everybody's trying to squeeze out that window. So I want to make sure it's very liquid. The other thing that happens with liquidity is that you get the spread of being only a few pennies, maybe 2-3 cents at most. And it's all stocks that are involved in earnings report or any kind of news report, they're going to be whippy. I mean, it's going to go up and down. Now, the $50 and $100 stocks are going to whip around maybe 25, 35 cents every candle, whereas the $5 stocks or whatever are not going to move as much. But on a percentage basis, actually the smaller stocks tend to probably move more than the larger stocks. All right, so you have to be careful when you jump in this, and so therefore there's some kind of things to watch for and things to do, and I'll cover some of those as we go along. Now, John, to come along to your point, what does high short interest? Let's zoom out to, excuse me. Let's go to a website called finviz.com. And I'm going to look under Skechers. You're going to get a few pop-ups here. You can register for this site for free. You can get most of the information here for free. What I want to do is I want to find out information about the chart. About the company. And what I'm looking for is the number of shares in the float. Now, that's the number of shares outstanding minus those that are either tightly held and cannot be traded or in the treasury. They could have 28 million shares or so in the treasury. And I'm looking for the short interest as a percentage of the float. I'd love to see something 10% or higher. It's an arbitrary number. Some of them that have the high short interest, let's just say, for instance, this one's low. But for instance, if it was at $28 and somebody was, let's say 25% of the people were short, and you see how the trend here for the last few days has been down, and then suddenly it gaps up to 26. If you were short, you could have your stop at 24. You could have your cover stop above 26 or even above 28. I can guarantee you, if anybody was short, they would be establishing levels of which, if it violates, they have to be out. And hedge funds and the like, they run through algorithms that'll tell them, one, how many shares they can be short, and then where to cover. Okay, another place to find is in shortsqueeze.com, and you can find, you just enter a symbol, and this says that percent of short is 3.88. It differs slightly from the one before. Some of them are significant, and then you're going to find that in TC2000, you have also a listing of the percentage of the float that's short, and that number itself can be significantly different than what you see on the websites. It has everything to do with when the data was updated. All right, and in this one it shows 4.78. No, they're every day. I have 61 that met my criteria for either, and I combined the list of Thursday night after the bell with Friday morning. I don't really care. I'm not going to trade after hours or pre-market except to sell. Now, if I'd known about it, I'm probably not going to be selling because I'm going to be out. That's my personal trading plan. But if I am holding something and I have decided to hold it over earnings and I get this gift from God, I'm probably going to take some off the table in the pre-market because who knows what's going to happen in the open. Okay, so I hope that answers your question. And the criteria for being on my daily list is decent volume, and I really don't care about the price necessarily. The price will really be something that you could trade. Don't look. Now, I'll put down stocks of any price because other people might use the list. I will filter them out. I'm probably not going to be trading stocks over $200. I'm definitely not going to be trading stocks below 2 and probably below 5 or 10. But I leave that. Do I manually input what? Do I create the list? I use some automated tools to help me cull the stuff from. They're semi-automated, but they are really more manual. I'll copy and paste the stuff from briefing.com, enter all of them into TC2000, and then manually look at the volume and cull out anything below that. Okay, so that's really what it is. All right, and that's just how I do it. It doesn't take that long, to be honest with you. I'm looking at normally on an average weekend, 20 minutes more or less to create the entire list for the week. I also, for people who were here early this morning, I have the earnings list and I take a snapshot of the economic reports for the day for the entire week. I do that snapshot for everyone. And the Econo Day, which has, I think, a much cleaner look at things because it also kind of gives you an indication of which ones are the most important, with red stars versus gold stars. Anything with a star on it's important. So, and then my list for today was earnings after the close on Thursday or before the open on Friday, and those would have been on my list to watch. So I copied these over. So I put this together and I share it with folks here in the room every day. I post them in the room. Post them the night before, the afternoon before, the night before, and in the morning of. And I go over them in the mornings when I have the 8:40 pre-market review, as well as going over the futures and what I see with the markets, and also go over a few individual earnings plays that I see of note, like Skechers was one this morning, and also some individual stocks worth watching, and then other people post theirs as well. So what they do is they came in and I highlighted Activision because I saw it. It reported the night before. My whole process starts on the evaluation. Is that last night after the bell, got the reports out. I watched it. Who was reporting? Nvidia, Activision, Cerner was reporting. There's Nuva, Nvidia. Nuva was another reason. Nvidia was reporting, and initially it was down in after hours, and then it recovered to flat, and then it opened the gap to 120. So we'll cover some of these in just a little bit. But there, I highlight those that and flag the ones I might be interested in looking at. Okay, so let's see. That's how I do it. Now, earnings gappers. I've got the list for the earnings in a list. No, absolutely not. I don't place any order during pre-market hours because we can flip around in a heartbeat. I'll show you why. I use a 5-minute opening range or a 2-minute opening range if I'm going to day trade. But stocks, when they have some sort of news event, they talk about amateur hour being the first hour of the morning. I think that's hogwash. I think really amateur minutes are the first 5 minutes of the day. Those are the people that put in market orders. They have an imbalance, and it takes anywhere between 2 and 5 minutes to get all the stocks open. And then we go into the regular trading day. So what I do is I start with this list. I don't want to see anything below 2 or over 200. I want it to see an average daily volume of 285,000 because that's my idea of 300,000. But I didn't put 300,000 or more because I don't want it to be 292,000 and I'd lose that one, a good one. Absolutely, JQ. It happens all the time. And I don't know whether they're playing games or they're evaluating the conference call or what, but I'm just not going to play that game. As well as it's very difficult for us, because we're not machines, to actually punch in all the numbers and the fact that it's bouncing around all over the place. So I can't control my risk. And the whole idea is not because I don't think I know where it might be going in longer term. Well, longer term meaning 5 minutes or 15 or 20 or even daily, but it's flip-flopping all over the place and I will not know where it's going. And then we have Ed Carter developed a earnings gapper scan for me, and I basically run that against the orders for today, and he gives me the list, And it came out with, that's just a by percentage change. Quotient technology, HDP. I would look at these, I look at these right at the open in the first 2 to 4 to 5 minutes. Now, I've seen some of these in the pre-market because I use my broker, which happened to be Thinkorswim, and I have that earnings list put into here. And what I can also do is on theirs, I can go to lovers and losers, and they have post-market movers and pre-market movers for me. Okay, let's put this down again. Okay, so I step through these, and then you can get some. All right, in here, we talked about something that gaps up, and I'm going to put this over to the side for a second. What happened at the first five minutes? Why I use the opening range? Even you use the 2-minute opening range. It opened here, then it immediately didn't trade for a while, and it got back down. This was somebody who was probably putting in a market order to buy. It was probably a retail trader. There's only 700 shares. That's an amateur. Then it started to pick up a little bit of volume and proceeded to go lower. Okay, so you can basically filter it out by letting it open, let it start going and give it an indication of where it's going to go. I digressed a little bit, but that's really it. Then you can basically step through these and figure out, or what I do is I go through the changes and that figures out which ones are actually gapped up and which one maintain their gap. Now, I'm just using it at the beginning of the day, and after the beginning of the day, it really doesn't matter. And then what I'm going to do is I'm going to bring up the stocks that I've had highlighted. Activision was indicating in the pre-market and after hours last night about $45.50 or so, 44. I think it was 44.50. And by the time it opened, I already drew a line. The night before, I drew at this line right here, that's a resistance line. I need Beatport if I'm going to do anything on Activision. It's got to break through that. I got to know where resistance is so that if I'm zoomed in, I know where my resistance is. And I get in here. Let's go to put 2. Okay, hold on. We know that it's at 45.50. Well, let me go to a 5-minute chart right here so I can see it. Oh, why is it not showing up? Okay. So I know 45.50. I go to 5 minutes. Well, it gapped up there. I don't know that I could have gone long on a 5-minute chart. On a 2-minute chart, I couldn't have gone long either. It didn't go short. It get taken out. And if I watched this in the first few minutes, if it had broken below 44.75 or so, it was going to fail. That huge volume. So this one, though it gapped up and the daily looks pretty good for those who are down here, the intraday chart, it's not a day trading. Part of the reason, balance, or actually not imbalance, we're getting a balance between the sellers and the buyers. That's why we're seeing no movement. So when it stock gaps to resistance like this, and hopefully if it had high short interest, which this does not, if it had high short interest, I could watch for the next day and we'll get a potential 45-degree runner. We'll get over to some of them that actually has the potential. Now this one opened at 11. I had analyzed it the night before and said that stock probably has resistance at 12.75. Look at the first 5 minutes of the day. There's the body from 11 to 11 and a half. I can probably go long over, say, 11.55 to 11.60, but my stop would have to be where? Well, initially on the first 5 minutes, it'd have to be below the first candle. That's too much, really. If I think my target's only going to be 12.75. All right. However, once I got to that second candle and it got above that and got to the third candle, I could set my stop probably under here, only about 1140 or so, with an entry about 1160 something. So I could have probably less than a 30-cent stop. I've never used it until it was pointed out to me by Ed yesterday, because years ago it only had the float wasn't there. It had days to cover, which was a standard from years and years ago. But people have now gone to this one, and they finally caught up. I'm going to show you how to play. Now, TC2000 data is public available data, free. It's it's as recent as 2 weeks or as old as 6. So it's not what you'd get if you paid thousands of dollars to have real-time data. But it's the best we're probably going to do for $250 a year. And it gives me an idea, a pretty good idea. All right. And if it's used to be 20%, if a lot of people covered right away, we didn't have a rally, they probably weren't covering. We'll go over that. Now, as far as you can go in here and edit your toolbar, and you can add percentage of float and make it highlighted in the background in red so it jumps out at me, that kind of thing. That's a whole different discussion on TC2000. I do that for people that my coaching, I help them set the stuff up. But that's beyond the topic for today. So the whole idea is that you can analyze whether you enter here an 1163 for a potential of 1275, but look here, there's another. I'm going to zoom over here to the left. Whoops, come back here, baby. All right. Stocks have a memory. There was a gap down here from basically this level. I said 1275 on here. In fact, with this stock over here, let me tab it over a bit, somewhere in the neighborhood of $12, there's a consolidation right there. A lot of people would use 1245, 1250 as their gap target. The gap target's really probably closer to 12, and that's what's panning out today. It got up to 12. Now, it says high short interest. You know what will possibly happen here? If this thing, because we've got huge volume, its average is 2.4 and we're at 12.9 today. I can guarantee you that if we start to move up in the next couple of days, tomorrow or whatever, this is a candidate for moving at a 30 to 45 degree angle, attacking the 1275 or going sideways for a day and then starting its move up. I don't like version 17. Multiple reasons, Paul. I don't have platinum. I think it's overpriced. By going to platinum, to go to version 17, I lose my VATS real-time quotes, and I'm not going to do it. Now, if you're not grandfathered in like I am, they won't let you do that. They won't let you have version 12.6. I think that stinks that they took away the VATS real time because it got in the way of their brokerage stuff. And I told them in no uncertain terms that if they disabled my VATS real time, I'd cancel my subscription and going elsewhere. Period. They heard me. They heard probably a lot of us. What's higher? About 10. About. It varies. Okay, quote was indicating somewhere around a 12 open with 13 here, 9.45. It's another candidate for a 45-degree runner, but it probably has limited upside of about $14, so it's probably better. Skechers, I jumped on Skechers because I thought it might go up through 28 and might try to attack this 32 level, but it was just a day trade. It doesn't have high enough short interest for it to get the short covering rally. If I just use the short percents. Now, let me show you. UBNT has 27% of the float short. Hey, it's going to rally, right? Not necessarily. Just because we have a high percentage of the float short does not guarantee a rally. Now, a short covering rally is those who are short feel the pain when it goes the opposite direction. In this case, they were feeling the pain as it was rising into earnings. But Ubiquity disappointed on the earnings. Somehow it gapped down. These guys are not feeling any pain. They're probably not going to be covering right anytime soon. So you're not going to get a covering rally. Now, the people who shorted into earnings in the shorter term might have sold somewhere down here. Sorry, covered right down here. Reverse their position. I don't know. I don't care. But just because something has high short interest doesn't mean it's not. A lot of people probably got picked out by this FET, like gapped up. But again, if you drill down and didn't use just the daily, you saw the fact that it only had 700 shares. So, now, that's estimated. I could go on my other broker. It might be 1,500 shares and 3,000, but it was not enough to get us in a long position. Okay, so that's how I look at each individual. Now, let me go over here. I've saved what we got. These Fridays are not necessarily a big day for earnings gappers. I saved our earnings gappers from yesterday. Now, it'll show you what we're down today, but yesterday, ARRY was earnings gapper with high short interest. Every one of these on here is between 8 and a gazillion percent short of the shares short. All right. Just basically did a breakout of 11. I do everything in about 25-cent increments. 0.00, 0.25, 0.50, 0.75, and 0.00 again. So if about 1150 was my target to break, it did that. This is also in a 45-degree potential as long as it maintains above $11.50. Maybe as low as 11, but this won't be a candidate until I get a buy signal. This is a evening star pattern, which is a bearish candle. So this is not anything you want to go long on. Now, unfortunately, or fortunately as it might be, there are people who saw it gap up this morning and ran a little bit and they jumped on more. If you use the 5-minute opening range, if you were very, very aggressive, you could have gotten in here, but you would have gotten out as it broke no less than 1285. So you probably lost them more than 50 cents a share. However, if you use these candles, it will help keep you out of the trade. In this case, maybe not. Use the opening range. Cliff. People were talking about Cliff in here, and I went, okay, 25% short interest. Where did I have resistance? I'm identifying my resistance here. Go into the bodies, basically. And that looks about $10.50. I'm not going to, if I really wanted to edit every one of them, I'd go in here and edit those, whatever. 1050. It zoomed up. Candidate for 45. Doing this little inside day today is not going to change that one iota. It gets pretty close to the $11 level. And that's where it's pulling, because the upper level here, instead of being 1050, that's 1085 to $11. And it's all approximate. So this is an inside day. We're still pointing upwards. It could trickle for the next couple of days. You'll have to decide on a swing trade now whether you make it break 1150 or make it break today's high and then be careful that it at 1150 to make sure that it still breaks through there and continues higher. You'll have to decide what works for you. Cray reported yesterday. Here's the downtrend. It started at bottom. It started to rise up. It gapped up a bit. It ran all the way up to the $21 level. And now we've got the beginnings of a 45-degree run. The only thing I need to be careful of is that I've got at $23, I have resistance over here. If I were long from 21 and it got to 23 and and it started to roll over and I had to take profits, I'll take $1.75 to $2. All right, somebody asked about Duncan today. I don't remember who it was. It has reasonably high short interest. Here's the prior level, about 55.50. One of the ways I do is I zoom down in there and find out where the candles are, the bodies. Maybe it's more like 55.25 or so. Okay. But basically I eyeball it and I use this high volume spike day here. It went up, it got to that level, and it ran into sellers. Oh, mercy me. That is such a surprise that we actually find sellers at the resistance level. I never would have guessed it. This actually is a bullish candle. The fact that it got up there and got pushed down, because if it opens and starts trading higher the next day, and that's exactly what we did. Let's take it on a 15-minute basis. This is yesterday. It went up, it pulled back, and it stabilized right here around $54. And that's where the buyers were not going to let it go below 54. And then they started stepping in. They got over 54.50, over 54.75. And now it's doing what? It's attacking the highs from yesterday. These high volume spike highs want to get retested because there were buyers interested in buying, paying up to that much for it. And because there was short interest, these guys were trying to push it down. And the buyers are saying, I don't care what you guys want to do. We're going to take it up. Now, this is probably going to take a couple of times of punching at the $56 level. But if it gets over 56, watch for a 45-degree run to the upside. So you put this one on a watch list. Aggressive trader could buy it earlier today. The less aggressive people that want just a 30 to 45-degree steady Freddy, wait till you get the breakout above 56. And not much above that. If it gets above 56, there are no resistance levels. FTK gapped up to here, moved up to the quote 200. Jennifer, I think we covered that just a minute ago on TC2000. It's a number that's provided for us by them. If not, remember, were you here when we were going over short squeeze and FinViz? We showed you where to get it. If not, you'll have to listen to the video. I had to wet my whistle there. I can't cover things multiple times. Sorry. GPRE didn't make it in. This wasn't on my list either. This looks around $52 for Paycom. Very, very high short interest. If it gets over the 52, it's a candidate for a 45-degree run. Even though my stochastics RSI in a normal situation would say that it's in the overbought condition. And in fact, the gentleman this morning was saying, it's extended than Duncan. It's extended. Well, yes, it is, but it can stay more extended than we can say solvent, to be honest. William, no, FinViz is not, it's again free data. So it's not any better or worse than I find here in either short squeeze or in TC2000. All right. Oh, thanks, Kevin. Appreciate your help. So Paycom is a candidate over 52. PPC, we had a belt hold here. Very high short interest. Where's it having trouble getting through? 21. We had kind of a shooting star here. If it opens and goes lower tomorrow, we pass on it. But, I'm looking for those that don't have overhead resistance, like the Paycom over 52. I'm looking for the Duncans over 56. And those, I call it easy prey, easy pickings. In the fighter pilot world, we didn't go after the strong one. We went after the weak trailer by himself, pick them off. So that's what I'm trying to do. Go after the easier pickings. Here's TDC, Teradata. Its main resistance level and area of congestion is basically over here to the left. But if it can get over the $33 level, it's going to run with high short interest. It may not do it, but I'll keep it on my watch list for a few days. And if it starts to get and give me a bullish candle of any sort pattern, I'll go long that one. And go long on just a couple hundred shares and let it run. And then set up a target or two. WWE, this is a perfect example. I pointed out in the pre-market for those that were there, anything over 21 to maybe 2150. And if we got over, I think it was 2150 or so, if we get over that level, which is about where we got to the highs yesterday, this thing is going to do a 45-degree run. Look at the 60-minute chart. Did a pullback. Do you think you could go long over this 2136 or so and set your stop here? What's that? 50 to 60 cents below where you entered? 60 cents, and the potential is ridiculous. Okay, I'm going to back up a little bit. Okay. Imagine yourself as a manager, a portfolio manager in a hedge fund, and you're short 500,000 shares of WWE. That's a 500,000 shares, even 100,000 shares. You were short, expecting it to have terrible, terrible earnings and to continue down. Well, at some point, you're going to have to say, I cannot continue, because what you are is you sold the shares that you do not have. You borrowed them and sold them, hoping that it'll go down and you'll be able to buy them back at a lower price. And so, therefore, at some point, they're going to have to cover that short. They're going to have to buy back in the open market those shares. Well, you can imagine they can take a heat for a little bit of time, but this stock is already now in 2 days. It's run from, oh gosh, it closed here at 19 something. Right now, it's up almost $3, 15% in 2 days, 3 days really, but in the 2 days since the close. At some point, their managers won't allow it. Their algorithms and their rules within the hedge fund will not allow it. They'll say, you have to cover. And they'll try to find ways to push the price back down. They'll do creative ways and options and stuff like that where they can reduce their risk. But guess what? It's already too late. If this thing keeps, and that's why there's a number of different people coming into the market on a stock like WV. There are people who have no interest in it until it starts to gap up and starts to run on earnings. So you've got people who like it and have had it from here, and they're going to be holders. They're not going to be sellers. You've got new people like me that are looking at it, and then they've got the people who are short they're going to look at it. So you got 3 groups of people that are looking to try to buy this stock. And the more people I've got looking to buy the stock, the better. And now that it's broken above there are people that were waiting for it to break 2140, 2150, and it's done that. So now you got a 4th group. You see how that kind of adds up? In the short interest, it's just fuel on the fire. Okay, I don't think Zen did anything, no. All right, so this is kind of how you can day trade, and I'll show you what I did with Skechers. Okay, no problem. If you need any more, just ask me, John. We'll go over it. All right, I saw Skechers. It gapped up, and it gapped over this 26.25 level, $26, which was the prior swing point. So it's going to open there. It's still going to have trouble with, I'm going to call it 27.75. And then back over here to the left, there was a $28 level, kind of, like a nice round number that it's going to have trouble with. All right. So what I do? I'll show you how I day traded this puppy this morning. All right. It opened up. I watched a 2-minute chart. Yeah, I was watching a 2-minute chart. And I saw that if it got over the body here plus a bit, I could basically go long over 26.72, looking for it to run to about 28 or so. And let's look and see how close I get my stop. I put it, once I got in, at 26.32. It was just kind of an arbitrary pull it out, but it wasn't arbitrary. It was arbitrary based upon, I looked at this stock and I said, if I go long at 26.72, actually, well, it's 26.70, and it got up there, ran up a little bit, and then turned back down. And I see a red candle like that. That's not what I expected. And it should have a wick up here. That's not what I expected. I don't want to still be in the stop. So I don't have to put my stop all the way under here, because I imagine, what would I have to see that would prove my premise, my thesis wrong? And in this case, I visualize what would happen that would prove me totally wrong, and I can get out. That's why I don't have to wait for a stop to get hit to get out. But if it doesn't move in my direction right away, that's where my stop is. And I know that I've defined it now as 40 cents per share. And I'm looking for anywhere between 60 to 80 cents, 1.5 to 2 times that. So I'm looking for, let's just say, 40 cents on that would be 12, and another 40 cents on that would be about 52. So that would be 2 times what I'm risking. All right, let's step over the next 2-minute candle. Get over here. All right, it got me in. I was looking for 26.70, anything above that. I got in. It was fairly tight, and got 2 cents. And it basically opened here, went down to that level right here, 26.50, moved up. That made me feel confident that I'm below that candle wick by enough that I felt comfortable about giving it some room to wiggle during the open. Warning, caution, stocks this early in the morning, you talk about 2 to 3 minutes in, are still going to be awfully whippy. That thing's going up and down 20 cents every 5 seconds. So you can't stare at it and get it really tight. It's not smooth. It takes some intestinal fortitude and to keep from getting a heart attack. All right, and then we got here to kind of goes up. It goes up, and I've got a 27.52 as a target, and I got out at 27.55. Okay, I'm going to ignore this 27.88 for the moment. That's left over. So what am I doing? Now, as it steps through here, am I going to leave my stop down to 26.32 as it gets up over 27? Well, I need to try to raise my stop as soon as I can. But what I need to do, though, is not raise it too quickly and almost guarantee, because a lot of whippiness may guarantee. So instead of going back below the candle before me, I usually try to go about 2 back. Okay. So I just have to judge it. This is a 3 exponential moving average. This is an 8 exponential moving average. You'll find that somewhere These things will touch and sometimes break the 3 if they're working. If they ever touch the 8, it's time to get out on a day trade. And notice how this punched back through the 3, but then closed above it. As long as it continued to close above the 3 exponential, I use moving averages to visualize the trend. These look like a fan or railroad tracks all going upwards. This is a very, very bullish condition. Now, I don't use them as trigger points, but when you're first learning them, you can use them as, I guess, training aids. So I've already taken 80 cents per share off. I will move my stop up to break even as soon as I practically can. And now, once I hit target 1, I'm trading with house money. My stop was a little about 26.80 something. So I'm still about 10 cents in the good. I've already got money in the bank with 200 shares. I've got 200 shares that I'm riding, and I'm going to try to give it some wiggle room in case it comes back to around the 27 and goes back up. The whole idea is to ride it in case I get a runner. What if it hits 32? I want to be in it. All right, it's starting to stall a little bit. Notice the volume's kind of kicking out. And it's 27.75. It's having trouble with 28. It's having trouble with 28. I'm on a 2-minute chart. What if I go to a 5-minute chart? Hold on a second. What that draws. Yeah, you sorry sack of doo-doo. Excuse me. I got a wild runaway mouse here. All right. At some point along in here, after a few 2-minute bars, I need to get off of a 2-minute because 1, it's going to be too difficult to see. Number 2, you're getting down in the weeds. I need to give it room. So I went to a 5-minute chart. Where is that? Let me bring this back. Target 1, 80 cents, 2 times risk amount. Target 2 turned out to be a manual stop. Target 2 should have been about 160, which would have been 4 to 1 or a little higher. But remember, we had resistance at $28 on the daily. So as it gets over 28, it starts to stall. It gets out to 28.50. I'm trying to get my winner, full winner. Could I have taken 100 shares off at the 28.40, 28.50, just under that? Yeah. Did I? No. It wasn't optimal. But I moved my stop up from 26.32 to 27 something, and then I finally moved it up to 27.88 or so. And then I started looking at what it was doing in relationship to the $28 level. And I mentally said, I'm using it to 28.18 or 28.16. And then I got tapped out. But for all of that and managing it, I didn't do it ideally. 400 shares, $452, with 200 at 80 cents and 200 at $1.46. I'll take that for, what, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 cents, 50 minutes, less than an hour. So you can bill somebody $450 an hour, I'll take it. Now that's how I day traded it, and the way you would, in this case, with $28, I've got the gap up here to about 32. The way I'm going to play Sketcher now, double dip it for tomorrow, Monday, the other tomorrow. I'm going to look for a break above the $28 level. Zoom in here to the 60. Hopefully it stops somewhere here around 27.50 or so. Gives me a nice base and then starts to move up. Do I need to make it break above these levels right here? If you want to. Your stop is below that level right there. So your stop would be very, very tight. When you're day trading, you probably can't trade more than 2 at a time. When you're swing trading, obviously you can do more. But I found that and at the same time I was trading Skechers today. I was trying to trade the Dow futures, and of course, I missed my only good entry during the day, and then there were some others that happened outside of my normal trading hours. So, yes, usually only one if I'm day trading. I'll take $400 or $500 a day on one trade. Now, do they all work out like that? No. Yeah. It takes a lot of intensity to watch it, but you can sit there and watch it and go back and forth. I wasn't staring at Skechers the whole time. I was at the very beginning during the entry. See, right back here, I was staring at it. Once it got up there, I moved my stop up, and especially after it hit target one, and I had my entry and I had profits, and they couldn't take it from me. I wasn't really all that concerned about it. I already had $160 in the bank, and I'm going to go from there. All right. Any other questions? Let's see. Go back here. Okay. Recent examples. Yesterday's list. Runner's list. Didn't know the runner's list. That's why I have notes for myself. 45-degree runners. You said we're going to cover Apple daily. What if you'd followed my strategy of going above the body of that day? You'd gone long 129. Maybe you'd have gotten here, taken a little bit of heat the last few days. You'd have made 2%, $2.83 on this one that had a very tight stop. ARNC. Oh, let me go over here. Go back to number one. Okay. Go back to Apple. Here's the entry. Anytime it gets over the top of the body. That one gives a signal. Now, it doesn't have high short interest, but that gap up, there are a lot of people who were really negative on Apple. This one has reasonably high short interest, but the gap up, it went sideways. It was up one day, went sideways the next, and then started to move up. Some people will say it let the 3 EMA catch up. Well, that's kind of a coincidence, but guess what? It did what I call a 1-2-3 pattern. And a 1-2-3 is a continuation, and Rick covers that a lot. And what it does is a big move up one day. It does some sort of consolidation. That could be anywhere in the little buy box near the top. And then on the third or fourth day after, it starts the 30 and 45-degree angle up. Exactly what happens. Do you think that you could have taken this one for a ride for $4 and 15%? And oh, by the way, it's still going. Now, I would sure hope that if you bought 400 shares or so of this, that you're taking some off the table and that you're only playing with your last little bit right now. I won't go over these others that weren't highlighted. I wanted to show up IAC. Try to keep this less than an hour, and I've not done that. But IAC, not very high short interest, and it went for about 3 to 5 days. That's without very high short interest. They go anywhere between 3, 4, 5 days. With high short interest, higher, they can go a little longer. Kulik, gap up. Now what we have to do is analyze where is resistance level. No resistance at all on that one. Where's IAC? IAC has resistance here around 75.5. And where is it having trouble around that $76? I bet you if I went on the daily, it'd be there's probably some resistance way back over here to the left. Consolidation. And XPI. It gapped to 100. Moved up. Here's this inverted hammer. Oh, that's a negative candle. Not really. Philip Morris. Got long back here, and it highlighted it as long here on the day of the 2nd. Nice ride the 3. Symantec, same thing, riding the 3 EMA. Wabash National, that's not a bank, that's truck manufacturing. Huge candle up and rode the 3 for about 3 days. The reason that it didn't run longer than that is because that's a pretty healthy percentage move. And in WWEs, we're getting our run. So SWRC pop up on earnings and hit 25 resistance. So sellers stepped in. Can we expect Monday to have buyers stepping in again? Well, let's look at it. I don't know what the short interest in on it is there. So let's go to stock quote. Sierra Wireless. Tiny amount. Stop the pop-ups, guys. Nope. Short interest is not going to bear anything with that one. So now I need to do is go to weekly charts. And I'm looking here anywhere between $25 to $26. It hit $25 to $26. Do I expect that to happen? Maybe, maybe not. It has, to me, a lower, this has a lower probability of success because it does not have the extra fuel of the shorts to help it. It might. It may have short legs, but it's got that resistance over here to the left. Hope that helps. ADOC. Can I copy the chart? ADOC, why don't you stick around after the presentation? You and I will do a private message. We'll make sure that we get you. I mean, are you looking for my layout of my chart, the template of a 5-minute or a daily chart, whatever? I use the 3, 8, and 17 EMA, 50 and 200 on all charts. Weekly, monthly, daily, 60, 30, 15, and look across the top of the tab. I've got an area chart, a weekly chart, whatever. So if I'm on a chart and I want to analyze what it is, I just go zoom and I can find it. I don't have to think about plugging it in. You're welcome, Frank. Any other questions, folks? Well, I want to thank you for putting up with me for this afternoon. A little over an hour, ran a little bit long. A lot of people tell you here I'm a little bit on the long-winded side, but we're a great group here. We'd like for you to consider giving us a trial and see if you like it. We have a diverse group here, mainly swing traders, but there are a few of us that do day trades and do futures as well. So come on in and give us a try, see if you like it. All right, thank you very much. Rick, all back to you.